So we've got to focus on what will get us there the fastest, and that is getting to understand what can we change the smallest and have the biggest result. Now let's look at this in terms of actual trading. Remember, we're talking about Kaizen or small improvements. Now these small improvements, the key to this is focusing on an area where a small improvement will have the biggest effect. So let's talk about trade size, meaning how many lots are we actually putting into the market. Now if we're going to adjust our trade size, let's say we up our trade size by 10%. Well, that 10% adjustment is also going to increase our risk. It's going to increase our reward. Okay, so we're going to have both an increased risk and an increased reward on a dollar basis. And if these are just a small smidgen out of balance, what's going to happen? Well, if we start to take on more risk, then the reward will automatically go down over time because we don't win 100% of the time. So if we start messing around with, remember, our 2-to-1 ratio, or we start taking significantly less than 50%, say we're winning 45% or 35% of the time, and all of a sudden we're taking more risk, you can see how the reward is automatically going to go down. So where then can we make these small improvements? Well, what we're going to cover in the next few minutes is the number one area where a very small improvement will mean exponential rewards, where we can take a 2 to 5% improvement in our psychology and have this exponentially return 20, 25, maybe 35% or more in net value. That's actual profits. So what are some of these big secrets? Well, first of all, the big secrets to being a real trader really are based in and focused on our beliefs about what is a trader. Now, let me give you my definition, and you can decide if it fits. A trader is someone who manages investments, trading, on an active basis for capital appreciation instead of relying on market forces. Market forces would be somebody that's relying on buy and hold. So the stock is, or a currency, or the future is moving like this, so they just buy it wherever, and they're hoping that the market will continue to go up. So that's it. That's buy and hold. That's not trading. A trader is somebody that tries to recognize market pattern, the pennants, the flags, the trading lanes, breakouts, etc., to appreciate to grow their capital. So that begs the question on what is trading itself. Now, trading, this may come as a surprise to you. Trading is nothing more than putting trades on and taking trades off. So the skill set of a trader then needs to be 100% focused on the actual act of putting trades on and taking them off. So the analysis, the indicators, all of the patterns definitely support our trading, but only in the same way that stretching, warm-up, drills, sprints, conditioning exercises support, say, for example, a runner in his running. Now, let me continue the analogy, and then I'll give you some specific examples. So, if you spent, say, $200 on running shoes, $120 on a running outfit, you joined a running club, does that make you a runner? Now, it may help make you a better runner, but think about it. The shoes, the outfit, the club have zero impact on the